FX Nation, what's up, guys? Welcome back to ForexU, and welcome back to our advanced course. And guys, as we continue on the subject of HTT, or higher time frame trading, last video I should say, we talked about, we introduced the concept of higher time frame trading, right? And we went over a real brief overview of what it looks like, right? Of what the higher time frame trading is all about and what we essentially would like to do, right? So a big overview of the bigger picture. So now let's talk about a couple different things when it comes to higher time frame trading. So as we know, as we talked about in the last video, HTT, we're going to be doing most of our, I would say, like picks, right? Picking on the actual pairs depending on the weekly markets. We're going to use the 4 hours as our entries. The TDI is something that we're going to use, of course, to help find the actual trade setups. And we're going to use price action and reversal patterns to help spot potential trade setups, right? So this is all, of course, just a quick recap of the previous video. So higher time frame trading, we're looking for railroad tracks, star patterns, quarterwoods, engulfing candles. So things that we already pretty much do, right? When we talk about trading, with market makers or whatnot, same kind of concept as far as what the reversal patterns and such that we're looking for. So now that we understand what we're trying to do, let's talk about, I think, one of the most important things, and that is, what does the data say, right? So what does the data say when you look at the weekly charts on pretty much, any pair? And really, let's talk about the most popular pairs, right? Let's talk about the pound USD, the pound JPY, EURJPY, pound AUD. Let's talk about those pairs. Those are pretty popular pairs. So what we found, okay, is that in 2009, all right, 2009, from January to December of 2009, pound USD had met a requirement of a tradable position only twice. Euro pound twice. Pound JPY once. Pound AUD once. Euro JPY twice. That is what the data says. Meaning that literally throughout the whole year, January through December of 2019, pound USD gave you 2 opportunities for the higher time frame trading. Euro pound, you see the numbers here, right? And so what it really broke down to is pretty much most pairs basically give you they average about twice a year. Okay? And so why do I mention this? I mention this because I want you guys to understand that this type of higher time frame trading is not for everybody. All right? Now, yes, it's only 2 times a year that this happens on, let's say, pound USD. This is just solely based off of 2019, by the way. So, going back, it could be more, could be less. But this is just to give you a quick average of just 2019. All right. Now, if we actually break down what this looks like when we look at more pairs, and really when we take a look at literally like almost every single pair that's out there, right? Here would be the essentially the schedule, right, that you would look for. Because obviously, when you're looking for this and you're seeing, 2 times a year on pound USD, obviously that's not going to give you, on the pips that you need, right? So it basically opens you up to more pairs. And so we basically ran some data on pretty much every pair you can think of, right? And we're talking about like pairs that are actually tradable, not like crazy exotic pairs or anything like that, but pretty much the most the most popular 28, 30 pairs or so. And so this is what we found. So the first thing is going to be, you can see there from January 2019 all the way to August 16th. You can pretty much see that there is at least a couple of opportunities every month if you look through all the different pairs. So for example, CAD Swiss, CAD JPY, EURCAD, USD CAD. Interesting how they all had CAD in them, right? But they all had pretty much the same dates of January the 4th. Interestingly enough, you go down to EURJPY, Pound JPY. They both had it on the same day. You keep going, you have AUD NZD in March, and then you have May AUD USD, and then so forth and so on. You see June, there's 4 opportunities. July, there's a bunch in July. So you can pretty much see how this kind of goes for the first 8 months of the year. So theoretically, you're going to have basically opportunities pretty much once a month, twice a month, 3 times a month. It depends on the month. You see that there's no data for February, right? There's no data for April either. So those 2 months didn't have any. Okay? So that was for the first 8 months. Now here's the second half. Second half, you can see there's a lot. You can see there's a lot in August. AUDs galore and pound in August 16th. So you had quite a bit of different ones happen on August 16th. That was a pretty popular day. August the 30th. So August, September were the 2 highest months. And you can see what happens after September. It completely dies off until December. Why is that? Well, holidays, right? Remember when I told you guys that during the holidays, October, November, December, I tried not to trade at all? I tried to take those 3 months off, because there's just not a lot of movement opportunity and stuff. There you go. There's why. There's nothing that happens after September. You see that? So, but you see when you open yourself up to all the different pairs, you essentially get the opportunities that you need essentially to make this a viable, something that you can viably use, right? And so I say this because every time that somebody tries that, I want somebody to try this and trade this if this is what they want to do. Understand that you're going to have to be patient. So if you're not patient, right, it's probably not going to be a thing for you to trade anyways. But you got to be very patient with this because you see what the data tells you as far as how often it happens. And this is throughout all the major, 20-some pairs, right? So keep that in mind. This is not for everybody. All right. So if what you're doing now with trading market makers is working for you, and you're happy with it, great. If you're finding yourself with a situation where you're back at work and you're working a lot of hours, this may be something that could help you out. Okay. So let's talk about identifying potential trades. Okay, so how do we identify these potential trades? Well, obviously we know we're going to use the weekly charts, right? We're going to use the weekly charts. We're going to we're going to use the TDI to help us, and we're going to go on the charts, and we're going to take a look at a lot of different examples of identifying potential trades, because this is going to be huge for this to work for you. If you can't identify the potential trades, obviously you're not going to be able to trade them. So this is a huge part of essentially what we do, right? So when we're identifying potential trades, okay, we have to know that we're going to have to look for more pairs to check, right? We're going to have more pairs to check. That's just, obvious from the data that we saw. We have to check more pairs. So as you're going through the pairs, you might check 20, 30 pairs. I don't know how many pairs you want to check. But you're definitely going to have to check more pairs. And that's just because you're looking for possibilities, right? All right, so we got to check more pairs. The TDI has to be at high or low levels. That is non-negotiable for this to work. The TDI has to be at the extremes of the high or the low levels. That has to be there, or else this does not work. Okay? Now you may ask yourself, well, why don't we do this on the high or low levels of like a 4-hour chart or a daily chart? It's a great question. Why don't we do it that way? Well, the reason that I don't do it that way is because you get a lot of false positives, essentially, that don't work out. So you might see a TDI on a 4-hour chart at either a high or a low level, but price just keeps dropping, and it doesn't reverse, essentially, like you want it to, right? Because this is essentially a reversal strategy, okay? This is a reversal strategy, guys. All right, you're waiting for that reversal, and you're waiting for the weekly reversal, because the weekly reversal leads to a huge trend change. You ever wonder why a pair goes down or up for 2 or 3 weeks without stopping? If you look at some of the pairs that we were looking at, like pound AUD, pound NZD right now, they've been going in downtrend seams for like months now. This is how you spot those, the beginning of those trends. Okay? So the reason that we use the weekly and the TDI on the weekly is because when we see these pattern reverses on the these lows, the extreme lows and the extreme highs on the weekly chart with the TDI, you have a very, very, very high chance of that being the reversal compared to the daily or the 4-hour chart. So that's why we use the weekly chart. Okay? So weekly charts, and we're doing TDI, extreme highs, extreme lows, right? So now we're looking for, also to go with that is, the reversal pattern. Reversal candle patterns, right? We're looking for quarterwoods, railroad tracks, star patterns, those kind of things. And I'm going to show you a lot of different examples here in this video, so you kind of know exactly what I'm talking about when we're trying to identify. We're trying to identify these potential trades. Okay, and of course, like we said, we're looking for the weekly charts. So all these things have huge factors in them, and they're all going to be very important for us to help identify the potential trades. Because if you can't identify the potential trades, guys, you're not going to be able to take them at all. So let's go ahead and let's flip over to the charts, and let's take a look at how we identify potential trades. All right, so let's go to the charts and let's check this out. All right, so how do we go about identifying potential trades? So literally all we're going to do is we're going to go to the weekly charts, all right, just like here, and literally we're just going to start from the very top. And really the first criteria that we're really wanting to search for, okay, is we need the TDI to be at the very highs or lows, okay? So meaning we need to find the TDI when it's around this area here, when it's around this area, and then when it's around this area here. Okay? Now, just notice what happens when the TDI gets to these extreme lows or extreme highs. What happens? Look what happens. Do you see this? Do you see what happens? You see this trend here that goes on, and that trend that goes back down, and then this trend that is currently on now? How long do you think those trends are? You figure this one started August of 2019, and it ended December. You see what I mean? This one obviously started December, ended in March of this year, and the current one that it's on started obviously in March of this year and is still going. So do you see what I mean? So if we just look back, okay, if we just look back, you know, here's an extreme here, there's a move there. Do you see that? Now these moves, by the way, they may look small, right? They may look small. This may not look like a big move, but in reality, this move is well over 500 pips. Okay? So they may look small, guys, but we're talking 500, 700, 800 pips. You know, this one here, look, extreme reversal. This one was over 1100 pips. Do you see what I mean? So that's why they only happen. That's why they only happen once or twice a year. You know? This is why. It's because the moves are so big. Okay? Think about this right here. Look, this whole area here, this whole area here, before this move here. This little move right here may look very small, but when you measure it out, it's 732 pips. 732 pips. And as you can see, it took from here all the way up here, which is another extreme, right? Up here, and another drop. Another extreme, another rise. Like this happens over and over and over again, very consistent on the weekly charts. Okay? So that's why we're doing it on the weekly charts. Okay? So weekly charts is all we're worried about doing. And then we're trying to find the low points down here or the high points up here. All right, and so all you're going to do essentially is, let's go through a couple of these right now actually, is you're going to go through them, and obviously this is in the middle, so that doesn't matter. You're only going to basically look for the ones that are at the low or at the high. So as you're scrolling through these, you know, you're basically going through and seeing, are any of these at the low or any of these at the high on the TDI. But you keep going, you keep going. You just had one up here a couple weeks ago. So you just had this one happen here a couple weeks ago. You just had this one happen here a couple of back in March. So you can see, look, extreme railroad track, pull back, and it's gone. You see that? So this is what we're talking about. Just go through them, look. And you're going to see, once one of them is there, you're going to see multiple of them there. So here's one that we just had literally at the end of May. Right here. Do you see this? Look, extreme, extreme, extreme low. Do you see this extreme low? The whole time we had. Look how this kept going down. Right? And look how this just went sideways. You see how this basically started to go up here? Look, you see how I hit this bottom here? Let me put this cross on. Here's the bottom right here. Do you see that? But it kept going down, but on this one it kept going up. What is that? Divergence, right? So there you go. Okay. So what we're doing in this video again is we're showing you how to identify the potential trade setups. Okay. How to identify them first on the weekly chart. So again, you keep going through these. Here's one that just happened again as well, extreme lows. Here's the reversal right here that happened. Right, and so look, CAD, JPY, CAD, Swiss pretty much had very similar moves, very similar outcomes here. Okay, so essentially this is what you would do, is just go through this, and you can go through these pretty quickly. Within maybe 10-15 minutes or so, you can go through a bunch of these and get these knocked out, right? And you'd be like, wow, I just went through all of them, and you can mark them on any of them that are ready or that are potentially there versus ones that are not. So you pretty much know whether or not there's anything for you to actually look at for that day or not. You know what I mean? So that's why that's important. So that's how you scan through these and find potential trades. Just go through them and look at the TDI. Is it at extreme levels, high or low? Yes or no? Yes or no? Like this pound AUD, it's not there yet, but it's getting pretty close. And you can tell because these lows here are going to be reached pretty quick. When it gets to these lows here, that's when this will be down here. You know? And so that's when you'll be looking for a reversal. So as we look at some of these now that you know what you're looking for as far as the first criteria being the TDI, extreme highs, extreme lows, let's talk about what it is besides that that's going to help you identify the potential trades. So you need obviously an extreme high and extreme low, this being an extreme high here, and we're looking for a pattern, right? So the reversal pattern is right here, this candle, this weekly candle. That's either an engulfing candle, railroad track, quarterwood, star pattern, right? So this is an engulfing pattern, engulfing candle right here. Do you see how this entire week completely engulfed the last 1, 2, 3, 4, 5, almost 6 weeks? So 1 week of trading pretty much took out the last 5. You see that? So that is an engulfing candle. That's what you want to see when you say, hey, that's an engulfing candle. So an engulfing candle pretty much takes out previous candles all together, right? So you can literally stack all these candles together and it would equal just one of these candles. Do you see what I mean? So that's an engulfing candle. So all of these candles here got taken out by literally one. So 5 weeks of trading by one candle. Okay. Let's take a look at some other extremes here. So here we have an extreme here. Do you see this? And then look, we have an up movement, up movement, up movement, and then all of a sudden it just stops. And what happens? It goes straight sideways. See this? Look, 1, 2, 3, 4 for 4 weeks. Do you see that? What does that look like? What do these 4 candles look like? This one really kind of throws it off a little bit, but this is basically a quarter wood. Okay? And then boom, it drops. These moves are literally like 800 pip moves. Let's go over here. What happened here? TDI is in an extreme level here. Right? You can see it's down here at extreme level. What happens as far as the candle pattern goes? Strong move, and then all of a sudden you get 2 dojis and then an engulfing candle. This right here would be like a modified version of a star pattern, because you basically have 2 dojis and then an engulfing on either side of it. Okay? But this right here is a reversal. You see this? And then look at that pullback that you have, 400 pip pullback, and then straight up. This goes up 800 and some odd pips. I mean, you can see that every time we're pretty much at the low, we have a reversal. Look, here's another one. Here's an extreme low. There's a railroad track going up. This went up how long? Went up what? 1,700 pips. 1,700 pips. It went up. Here's another one. Extreme low. Railroad track. This one went up 500 pips. So I mean, you can see that it's all there. Every time that they're at extremes on the week, look, there's a drop. Here's an extreme. There's a drop. It's pretty consistent on the weekly. Okay? So that's what we're looking for, just to look at potential, trade setups, is TDI and then the reversal pattern. We have to have, there's got to be 1 week, obviously, that's got to create that reversal pattern, right? So just because it's at an extreme level doesn't mean that it's not going to reverse right away, because look, this started very deep here and it took how long? 1, 2, 3, 4, 5, almost a month and a half before you got a railroad track here to go up. Got it? So keep that in mind. Look, engulfing candle right here. Look, see this? Extreme engulfing candle. Look at how many candles. 1, 2, 3, 4. About 4 candles. It took out 4 months of trading all in 1 candle. Here's a quarter wood right here. Extreme goes up. This one was about 300 pips, 260. From this pullback here. From the pullback, it was actually 900 from the pullback here. Wow. But you can see what I'm talking about, guys. Alright, so that's what we're looking for. Weekly charts, TDI extremes, highs or lows, and a reversal pattern to go with it. There's no trade setup if there's no reversal pattern. TDI is just helping you try to locate the trade setups, but the reversal pattern has to be there because without it, you can't get into the trade. In this week's video, we went over identifying the potential trade setups, right? Weekly charts, TDI, reversal patterns, engulfing, quarterwoods, star pattern, railroad tracks. Those all have to be there along with the TDI on the weekly charts. Those are the first steps to getting into the to identifying the actual trades first. Okay, if those things are not there, you don't have a trade. Okay, make it real simple. Don't overcomplicate it. All right, don't overcomplicate it. Remember what the data shows. This only happens 1 to 2 times a year on each pair, at least from 2019 to today. So all that means is that you're just going to be looking at more pairs. That's it. And you can see we scanned about 20 something pairs in about 10 minutes or so. So it wasn't even really didn't take that long to go through and see if we potentially had any kind of trade setups or not, or any kind of potential things that we needed to look out for. Okay. Another thing that you could do as well is how you can set up alerts on TradingView on the extreme highs and lows of the TDI on a weekly chart. So if you want, make it easy for yourself and put alerts here on the TDI. Let's say put alerts like right here. Put an alert right there on the TDI. And then you can put an alert down here at the bottom on the TDI as well. Shit, you could do that for every single pair if you want on the weekly. Right? Put it up here. And you'll just get emails. You'll just get emails whenever the TDI goes to those extremes. So I don't know how easier you want it to make it, but that's pretty damn easy right there. So you can do that. You can even do that if you want to. So it's like that, guys. Like literally like that. You can just put alerts on the TDI. I don't know why I didn't even think about that before, but you can put alerts on the TDI. And just let it alert you. It'll send you an email of when it reaches those points. All right, guys. So I hope you enjoyed this week's video. Next week we're gonna talk about how we can use the fib to track our entries, and we'll talk about exits as well. All right, guys. Thank you so much. Have a great rest of your week.